All right. A couple more people coming in. Yeah. All right, welcome everybody. There's a lot of us still joining in here. We got a big group today, which is good. I'm excited. Excited to be here. Thank you guys all for coming. We're gonna give it a few minutes before we get everybody in here. Let everybody who is signed up to get in here. I know there's a couple that are still coming in, so we'll do that. But while everybody that's on here, as long as you can see me, hear me, that's the main thing. So let's make sure this chat is working and just throw out there, say hi, make sure you can at least let me know if you can see or hear me at all, and make sure this is going good. I'll start off the chat. Perfect, thank you. So the biggest thing with this webinar, there's a ton of information that's going to come at you guys. So you won't be able to talk directly, but if you use the chat the entire way through, we're always going to be monitoring it. We're going to be responding to you on there as much as we can. If we start getting flooded and can't keep up, don't worry. There's at the end of this, there's going to be a Q&A session. So then we'll get to what we missed, and then you guys can just fire off questions at us about this all, and we're happy to answer everything for you guys. The other thing is too, I'm going to try and wrap up the majority of this by 8 o'clock and then hang out with you guys afterwards to answer questions. But if for whatever reason you need to jump out, you miss something, whatever the case may be, this is recorded, and I will have this sent out to everybody that's here either tomorrow or Friday at the latest, and that way you guys can rewatch it if needed, and we can go from there. So again, thank you guys for coming out. We got a really big group already right off the bat, and we're going to get started. There's two of us on here. I'm going to be talking for most of it, but I do have a partner of mine. I'll introduce you to him in a bit. But yeah, so again, thank you guys for coming out. I hope you guys are staying warm now that it's, I can't really say it's starting to warm up, but it actually is compared to last week. So but yeah, there's a lot of information. I'm going to be running through this fairly quickly. So if I'm going too fast, I'll try to throw the questions out there. Let me know, and then we'll do our best. So again, thank you guys. Thank you. Use the chat as much as you can. Don't be afraid. Answer or ask any questions you can. Let's see, make sure this is working okay. Here, I don't know if it's working. If you can't hear me, I'm not sure. I think a lot of people can or not. It is, so we'll see here. I'll try doing one thing for you guys. Here, how about now? Yeah, so yeah, use the chat as much as you can, ask as much questions. If it gets more personal and I can't get to it right away, we will get to it at the end, or we'll chat one-on-one later on and get those answered. So being as it's perfect. Okay, well, for now we're gonna get running through this again. For whatever reason, looks okay. Sorry, just gotta check. So my mortgage, I got a mortgage broker on my end that's helping with this. He's just having internet issues right now, so I'm gonna run with this on my own for a little bit. So I might not be able to get to the chat as much as I want to until Ryan gets back, but he's going to but he'll be in here eventually, so I'll watch for him to come in. But anyways, I'm gonna get started just because we have a lot to go through, and then we'll get this rolling. So again, thank you guys, thank you everybody. I'm excited to do this. There's a lot of us in here. I'm excited to get all this going. So first off and foremost, when you guys signed up for this, whether you've seen the ad, whether somebody referred you to this, whatever, the first message that gets sent out is that by signing up, I am going to give you something for free. And that's true. I always do this every time. And what that is, it's a free book to the Complete Guide of Buying a Home. I have developed this book. It was about a year or so ago that I finalized it. It's full of all good information about buying a home. So you guys are going to get that for free, along with the webinar recording in an email. You can read it on your tablets, internet, or tablet, computer, e-readers, whatever. I'm also going to give you a condensed buyer's guide that kind of puts this all into a short version. and you can have that as well. So again, that's just saying thanks for coming out. So watch that for your inboxes. I have been having issues with our email system that it's sending all this stuff to your junk folders. So when I send it out, if you guys don't see it by the weekend and you've checked your spam folders or your junk folder and it's not in there, reach out to me. I'll make sure I get it to you personally. We are working on getting that issue fixed here. So, okay, as a first-time buyer, nobody's ever bought a home before here. We were all first-time buyers, myself, my partner Ryan, if he can get back on here whenever he can. So I just want to make sure he's not waiting or anything like that. So it's a big thing. If you guys are feeling any of these things, that's fine. It's normal. Majority of us buying a home is the biggest expense that you're going to have in your life. And we want to make sure that we make it a very smooth transition. We want to make sure you guys are fully aware of what goes on and what you need to do for this. Okay, so our goal is by the end of this webinar is to alleviate most of those. And if not, we'll do what we can to help you guys out at all. So don't worry about that. That's what we're gonna do. I just want to make sure Ryan's back in. I'll do my best to do his introductions for him anyway. So first and foremost, just so you know who it is you're talking to, I'm Andy Goddard. I'm a realtor here in Saskatoon. I'm with eXp Realty, which is a 100% cloud-based real estate brokerage. It's much like Remax, Century 21, all those are the exact same thing. The only thing difference is we don't have a physical brokerage in the city. We're all online and work from our own home. So if you ever want to meet one-on-one and talk real estate, that's fine. I usually just meet at a public space like a coffee shop, a restaurant, things like that. So no worries there. I've been with eXp for years now. I've helped many satisfied buyers and sellers do a big change in life, whether it's upgrading, downgrading, moving to different parts of the provinces, whatever. It's so fun doing that. I love doing this all the time. Myself, I live in Warman. I've been in Warman since 2016, but I'm born and raised in Saskatchewan my entire life. I did have about a 10-year stint out in Alberta, but I'm born and raised in Saskatchewan. Love it. Love calling this place home. I'm out here with my wife, who we've been married for just over 7 years now. We have a son and daughter and our dog, and we love Warman. It's a great place to live. And yeah, I like to help other people find Saskatchewan home as well, because I just love being here. So I love this. I love everything about it. I'm going to put in the chat here, just so you guys have it. There's my Linktree address, which has all my social media accounts. So you know exactly it is who I am, both my business and personal ones on there. I have nothing to hide. I'm a pretty transparent person. And also there's a booking link I'm putting there. And you're going to see this booking link come up quite often during this webinar. It's basically what it is if you want to talk one-on-one with us, whether it's you want to get started on the whole process or you want to talk more of us on a more personal level on what you need or what we can help you with, then you book the link here with us. It just sets up a calendar with myself and you. That way I'm for sure there one-on-one with you. Okay, so I'm going to put it in the chat a lot so you don't miss it, but just so you're aware, that's what the booking link is for. But anyways, that's a little bit about me. I am the realtor here in Saskatoon. I was hoping that, let's see if Ryan might have jumped on or not, but I think he's still having technical issues. So I'm going to do a really quick introduction for him. I'll probably not do nearly as good as he can, but I'll do my best. So when it comes to real estate, most of us can't buy real estate without financing of some sort. Some people can pay cash, but majority of us need some financing. So in order for me to do my job, we need to have Ryan do his job first, which is to secure the financing. All right, so we work as a team. We worked as a team for many years, and it's been really, really good. So I'll do a little quick introduction. Usually Ryan can. I'm just going to see. I'm just going to check to make sure he's okay. And we'll keep going. I'll just make sure he's not in with us here. Okay. So Ryan McEwen is my mortgage broker partner. His job and our team is to secure financing for you. So when we talk one-on-one, I send you over to Ryan. Ryan's my guy that sets up the financing. He's been doing this for over 20 years. I haven't met a mortgage broker I can work better with than Ryan, or somebody that can solve a lot of problems as Ryan can. He is with TMG, which is the mortgage group. He's been really good. He's helped us a lot. We've dealt with many first-time home buyers and new to Canada. Anybody who's new to Canada as well. We have a lot of programs for first-time buyers and anybody that's new to Canada. He works well with all of that. He also services Saskatoon and surrounding areas. So much like us, we are both licensed in Saskatchewan. So even if you're not buying in Saskatchewan or in Saskatoon in the area, we can go all over the place if needed. All right. He's lived in Saskatoon pretty much his entire life. His wife is amazing. He's got two older boys. He loves calling Saskatoon home too. So I've got Warman on lockdown. He's got Saskatoon. We know everything about the area. So this is who is going to be talking here. Well, mostly me right now until Ryan gets back on. So anyways, that's the two of us. We're going to get into this and the whole process of buying a home here and get you guys hopefully out of here at a good time. So I'm going to tell you about what the whole steps to home ownership is from right now to the very end. So on this slide alone, I could probably go over this for well over an hour just because there's so much to go into it, but I'm going to condense it into like a minute or two, really. The only thing that I can't do is I'm not going to go over contracts because each home that you purchase is different than the others and it's individual. So I can't go over the contracts, but if you ever go to put an offer in or we go to put an offer in, what I do for anybody that buys with me is I sit down one-on-one, either a Zoom call or in person, and go over the contracts together so you know exactly what you are signing. So don't worry about contracts. I can get into that later on a more personal one-on-one thing. So the first thing somebody does if they say, well, I'm tired of renting, or I just got here and I want to buy my own place. I want to start building up my real estate portfolio, whatever the reason is to start buying your first property. And they ask me, what do I do? The first thing is I say, you should learn what you can about what you want to do. If you're just wanting to find your first house, that's great. We have a webinar for that. If you've watched a webinar, great. You get a good idea of everything. But the first thing you need to do in order to buy a home, as long as you don't have the cash for it, is get financing. So you need pre-approval for a mortgage. That is step number one. There's a few reasons why. Main one is it tells us that range of affordability. We need to know how much you can shop with, because honestly, it happens more often than you think. So I try to limit expectations to where they should be. I've had people go out and say, well, I want to buy a $500,000, $600,000 house. This is what we want. We've been looking online for a while. We found a lot of places that we like, and then they get pre-approved and they find out they're maybe only approved for 380, 360, and that changes everything because they were looking at $500,000 houses and find out they have to start at a $380,000 house. You can still find great houses in that range, but the disappointment going from 500 to 380 is huge. So we want to just eliminate that. So we want to find out what your price range is so we can shop and find you the best property in your range. The other reason why it's really good to have a pre-approval in place is because when we look at properties, majority of them are owned and lived in by either the owners or renters, right? So when we look at the property, we are essentially kicking them out of their own place so we can have a look at it. And especially when it's been the way it has been the last week or two, where it's been minus 30, I don't want to kick anybody out of their house in the freezing cold if we can't even buy the place, right? So we have to take other people's consideration into effect too. So this is why pre-approval is really huge. It lets us know what we can buy, and that when we look at places, we know that if you really like it, we're in a prime position to purchase it, especially if there's low inventory and multiple offers, okay? So we'll get into the pre-approval here right away, but once we have that pre-approval in place, what we do is we sit down and we figure out the exact type of property that fits you and your family, whether it's a fully detached house, whether it's a townhouse or a duplex, or even an apartment condo, whatever is going to fit you and what your needs are. We'll figure that out too, and then we'll find whatever's in your price range and start the house hunt there. We'll look at any properties on the MLS. So as a realtor, I have access to every property that comes up on the MLS system. So whether it's listed by any other brokerage, I can get access to every single one of them. I can also find access to off-market properties that aren't on the MLS that I may have, knowing other sellers that are maybe ready to sell in a little bit, and it's a property that fits you. So there's lots of options to find you the right property. So after we look at everything and you found one that you liked and you're ready to buy it, we figure out what kind of offer we want to submit to it. And then we go into the negotiation period. We send the offer to the sellers. If the sellers accept it, we're good. If they want a different number, they could counter us, and we go back and forth till we find that right price that both sides are happy. Once we have an accepted offer, we go into a condition period, which is about 2 weeks. So that gives Ryan time to complete the financing now that we know how much we bought the place for. And it gives us time to do home inspections, look at the condo review documents if we're buying a condo, and any other inspections that we decide to get during that condition period. It gives us that time. And 2 weeks is lots of time to have it figured out by then. So once you're satisfied with all the conditions of the home, the inspection went good, the financing is good, the condo schedule looks good, then you lift the condition and it becomes a firm sale. And basically all you're doing now is waiting until possession date. So during that little waiting period, depending on if it's a vacant property, an owner has to move out or a tenant has to move out, we figure that out. But then you sign all the documents with a lawyer, transfer the title into your name, get the funds transferred to the sellers, and then we meet on possession dates. So what happens is I get the keys from the sellers, I bring them over to you, we go to the property, and we do a very thorough walkthrough, because when you're buying a pre-used home, there is no warranty on the home. So we have to make sure it's good before you take possession. So during that walkthrough, we make sure everything is still the same as it was at the home inspection and nothing's broken or not working as it was before. Because after possession date, you're basically on your own as a homeowner. So we want to make sure it's all good before I leave. If it is good and you're happy and satisfied, the keys are yours. You're a proud owner of your first home. And off you go. So again, that's the very condensed version of it. Obviously I can go over a lot of it, but that's start to finish: searching, offering, conditions, and possession date. So the first thing I like to get into, I see there's first time home buyer qualifications and things like that. So we're going to get into a lot of that right away here. Usually Ryan, I just want to make sure he's not, I haven't missed him coming back in yet. I haven't seen him yet. So usually he's going to be here answering the chat, but he's not on right now. So I'll do what I can and keep this moving at a good pace here. So as I see, there's already people asking questions in the chat. So I want to know, has anybody ever heard of the first time home buyer incentive program that the government of Canada has right now for anybody that's a first time buyer? Yes or no? I'm curious if anybody knows about it. Okay, so we got a yes, some no's, and that's usually how it looks, right? Usually there's a few people that know and usually some that don't know. And there's a lot that goes into this. So again, here it's not the first time savings account or anything like that. That's a new one. This is a first time homebuyers incentive program that the government has. And I'll go, yeah, so there's a lot that goes into this, which is great. I'm going to elaborate on. So if you get a little bit confused during it, don't worry, we will elaborate a lot more on it because there's a lot that goes into it, but I'll show you why this is a beneficial program. However, the first thing before I get into this, Ryan and I have discussed this lots. We've helped lots of people use this program, but the one thing we like to tell people is if you don't need to use this program, don't use the program. Okay, we're not saying it's a bad program. We're just saying it's beneficial to do this, to buy your own home on your own without the government's help. But the people that have used it, it's a really good program. And I'll explain why it can be beneficial and help you out. So far, as of this was from 2019, the government of Canada used about $1.25 billion worth of funds to make home ownership more affordable for anybody that's buying their first home. So obviously the number's a little higher now, but they've used a lot of money to help people out. And what they're going to do is they're going to invest in your property that you're buying. They like to invest in it and let their money grow, just like we want to see your property value grow too. So it is a shared equity mortgage. What they're going to do is they're going to give you a chunk of money to invest in your property, and it actually goes on a mortgage on your property. So there's going to be your mortgage and then their smaller mortgage, okay? It's a shared investment on both the upside and downside of your property value. The nice thing about the money they give you is it's not interest bearing, so there's no interest on it. There's no payments you have to make on it, and you can pay this chunk of money off at any time without getting penalized for it. So what they do is when you're going to buy your first home anywhere in Canada, the minimum down payment you need to have is 5%, right? So the government is going to give you an additional 5%. They're basically going to double your down payment. And I'll explain why this is going to be very beneficial to you. For anybody buying a new build, they can go up to 10% on top of yours, but I don't talk a lot about new builds because majority of first-time home buyers don't buy a brand new build right off the bat. Some do, but it's, I would say, very rare that they buy these ones. Sorry, I see. Can I count as first-time home buyer in Saskatoon? If you've already ever been on the title of a home before, whether it's in Alberta, BC, wherever, if you've ever been on the title of a home before, you are no longer qualified as a first-time home buyer. The only time it's ever affected is if you were a homeowner and you got divorced. Then I believe Ryan would have to elaborate that for me, but once you become divorced, I think it resets for you. Just so you guys are aware. So if doesn't matter where in the country, if you've ever owned property before, you are no longer a first-time home buyer. So anyways, so who can apply for this and who's eligible for this? So anybody who's a Canadian citizen, permanent resident, or non-permanent residents who are legally authorized to work in Canada. So if you're here on a work visa, that's fine. The only stipulation is as long as you have 183 days left on your work visa, you can still apply for a mortgage. If it's under 183 days, then they recommend you get your permanent residency status. All right, but as long as you're here on a work visa, you can still qualify. At least one person has to be a first-time home buyer. So if you're going in with your spouse or a family member or a friend or whatever, as long as one of the people that are buying a home is a first-time buyer, you can use this. If you are going in with somebody else, as long as you don't make an annual income combined of $120,000 a year, you can qualify for this. Anything, if you make over $120,000 a year, the government feels you make too much combined and you don't need their help. Anything under that, you can apply for it. Now there's a bit of a cap to what you can buy using this program, which is why we always say if you don't need to use it, don't use it. But there is a cap that the combined insured mortgage and incentive amount cannot exceed 4 times your total qualified annual income, which means if you earn $100,000 a year combined, you can't buy a house worth more than $400,000. So they cap you at 4 times your annual combined income. Also, the other cap to it is the maximum down payment they give you cannot exceed 19.9%, because what happens is any amount of down payment under 20%, you have to have an insured mortgage by CMHC, which is a Canadian Mortgage and Housing Corporation. So an insured mortgage is anything under 20%. Anything over 20% becomes an uninsured mortgage. Okay, and then you don't have to pay mortgage insurance premiums. This program is not going to help you get out of that, and I'll explain that a little bit later here too. There is another first-time home buyer program that can help you with a down payment, and it's if you have RRSPs. So if you have RRSPs, you can withdraw up to $35,000 from them per borrower. So if there's 2 of you, you can essentially take up to $70,000 out of your RRSPs. And you can use this program with the incentive as well. They're not exclusive. They both define the first-time home buyer in the same way. The only difference with using your RRSPs is that within the first 2 years of taking them out and using them, you do have to start paying it back in chunks. You don't have to pay it all back at once, but as long as you start making installments in it, that's fine. If anybody wants to use your RRSPs, please reach out to your provider first. We did have an incident where we purchased a house or put an offer on the house, got it accepted. They were going to use their RRSPs for a down payment, but they ended up finding out after the fact that they couldn't use their RRSPs. So it crashed the deal. Nothing happened. They didn't lose any money or anything like that. They just couldn't buy a house at the time. And now they're still waiting on getting a down payment. So in order to just eliminate all that, please check with your provider first or reach out to us and we can help you out too. Okay. So then back to the incentive, now that I've got off track a little bit. When can you pay this money off? So there's no installments, there's no interest on it or anything like that. So you basically pay it off when you decide to sell your home, right? That's the first way. If you don't pay out your home after the 25-year mortgage term, you can do it when you sell and use the proceeds of the sale to pay off their chunk. You can do it anytime during the first 25 years by either your own savings and pay them off, or you can refinance your mortgage and put the money onto your mortgage and go that way. The third and final way is, let's say you lasted 25 years with your mortgage and your house is completely paid off. Either you pay them off in a lump sum again, Or because you have nothing but equity on your home now, you can take out a small loan against your home and pay them off that way. Then you can do like a payment plan. Okay, so those are the three ways that you can pay it off. And I'll explain why you can't do it installments. So let's say you bought a house at $400,000. They're going to give you $20,000, which is 5% of that. Now, when you go to pay them back, you do have to pay them back at 5% of what your home value is worth at that time. Okay, so they're investing their money into you. They're basically giving you $20,000 and saying, grow your property value, which grows our investment as well. So if your property value rises to 500,000, instead of paying them 5% of the 400, you're paying them 5% of your current value at 500,000. So now you're paying them 25,000 instead of 20,000. But on the flip side, if your property value for whatever reason decreases to 300, you only have to pay them the 5% of that, which is 15,000. So the money they give you is going to fluctuate with your property value. So a lot of times we say, if you use this program, try to pay them back as soon as you can. That way your property value doesn't grow so much that you pay more than you have to. Okay. Now, obviously going from 400 to 500,000 is a drastic jump. You have $100,000 worth of equity in your home at minimum, so paying them an extra 5 isn't really that big of a deal. But even if it goes up to 425, that's an extra $1,200. So it's not like drastic numbers, but if we could avoid giving the government more money, why not, right? So that's why you can't pay it off in installments, just because they need to know exactly how much your house is valued when you go to pay them back. Now, I think a lot of people are probably wondering, well, where's the benefit of this? Sounds like they're going to give us money, but we get more back later. Why does this help us buy a house? So here's an example of how this is going to help in one way. There's a couple ways it's going to help you. So let's say you buy this house at 400,000. You put your own down payment down of $20,000. You now have to borrow $380,000 from the lenders. Okay, that's bare minimum. Now they're going to give you $20,000 on top of that, doubles your down payment. You're 10% down payment now. So you're only borrowing $360 instead of $380. So right away, your monthly payments are cheaper. And then when I talked about mortgage insurance premiums, so anything under 20%, at 5%, because it's the minimum, the insurance premiums are going to be at the highest point. When you go to 10%, it drops those drastically. And then at 15%, it goes even more until you hit 20% where you don't pay any. All right. So by giving you more down payment, it's dropping the insurance premiums as well. So you're borrowing less and less insurance premiums. So it's the government's trying to give you smaller payments at the start to help get you into a house. You're not maxing yourself out. Okay. That's the one way. The other way, which is the more common way of helping people, is let's say you're approved for $400,000. Just based on your credit and your income, which we'll talk about in a little bit here. You can be approved for $400,000, but you only have $15,000 saved up. Well, that's only good for a $300,000 house. So it'll cap you at that of what you have for down payment. But essentially, if they give you another 5%, doubles your down payment, it boosts you to the level that you want to be at, right? You can be approved for 400. They're going to give you money that boosts you up to that extra limit. And that's where we help most of the people, is just to give you a little bit extra to get in a higher value of a house. So that's one of the main ways of doing it. I know Ryan's gonna have to talk on some things. I just want to see if he's back with me yet, but it doesn't look like it. So I guess I'm on my own for most of this. So, and Ryan's my mortgage guy. He's the guy that can explain a lot of this stuff too, but I'm kind of flying solo a little bit. So I'm doing my best here. The other thing with mortgage insurance premiums, I've had a lot of people say, well, I'd rather put 20% down so I don't have to pay these insurance premiums, which is a good point. But there's things you have to think about too. An uninsured mortgage now, because there's more risks in a sense, the interest rates are higher, almost a full % higher. So if let's say interest rates are 5.2, an uninsured mortgage could be 6.1. So you may not be saving as much as you think without paying insurance premiums. You might be actually paying more because of the higher interest rate. And before you decide what you want to do either way, again, talk with a mortgage broker like Ryan and say, this is what we want to do. Is it better to go with an insured mortgage or an uninsured mortgage? And he can show you payments on both interest rates and things like that and show you which way you're saving money, right? So before we make that decision, but just be aware of that. Okay, so I think that covers the incentive. So again, just to recap, it's either going to save you on how much you have to spend per month, or it's going to boost you into a higher level of property if your income and your credit and all that stuff can support it. All right. There is a third way. This is for anybody that's new to Canada. So anybody who is new to Canada between 6 months and 12 months that haven't quite been here a year, you have to put 10% down minimum. Everybody else gets 5%, but anybody that's been here from 6 months to 12 months has to put 10% down. And we've helped many newcomers in Canada buy a house in as little as 6 months with their own 5% and this incentive that gives them the additional 5%. Okay, so that is another way that this helps as well. So it's a good program if you need it. If you don't need it, it's a good not to use it either. There is a recording of this. I know there's a lot that's covered on here, so there will be a recording sent out in a day or two here after this. Okay, so again, I'm going to put this in here just because here is the booking link. So if anybody wants to talk more about this or one-on-one or wants to kind of talk with Ryan, book a call with us and we can get that set up with you guys. We're going to get into the whole approval process, which again, this is Ryan's forte, but he's not with us yet here. So I'll keep going here. So again, a big mistake is not getting a pre-approval. Like I mentioned earlier, we need to know how much you can afford. We want to make sure that the houses we look at, you can actually buy in case you really want to buy the place, right? So we need to know your range of affordability. So how do you get, what does it take to get a mortgage approval? So there's 3 things that you have to get a mortgage approval. They all have to work together. It's like building a house. You have to build it all together to make it work. This is no different. So the first thing they need is credit. Anybody that goes to get financing, whether it's a car or credit card or anything, they need to know what your credit's like in order for the bureaus to give you money. So a 620 to 650 credit score is a really good start. That's the starting point. Anything above that's really great. Anything below that gets a little harder to get you in a really good mortgage program. The other thing with credit, obviously they want to see how good are you at paying your bills? Are you on time? Are you having any late payments? Do you have a bunch of credit cards that are maxed out? Do you have creditors calling? Have you been in a bankruptcy? Have you been on consumer proposal? Things like that. They need to see what you are like by getting money loaned to you. All right. And if that's all good, perfect. Anybody that has had a bankruptcy or consumer proposal, you can get back into this as long as it's been over 2 years or at least 2 years past you clearing that out. Okay. The next thing they're going to look at is income. Obviously, they need to know how much do you make and how much can you afford to buy. So for a lot of us, they're wanting to see 2 years worth of tax returns to show us a 2-year kind of range. However, if you have a salary position, we can just get a letter from your employer that shows what your salary is and how much you make and what you're guaranteed to get, right? Again, for anybody that's new to Canada, I know we talked to a lot of you, a lot of new to Canada people. Obviously, you're not going to have 2 years worth of tax returns, especially if you just landed, even 6 months ago. There is a new to Canada program. Ryan is fantastic about talking about it. I'll try my best to explain it to you guys. But there is a new to Canada program that essentially eliminates you having to wait 2 full years of tax returns. So don't worry about that part. Another stipulation though, because we have had this a lot lately, is any self-employed style of jobs is a lot tougher too. So I'm talking anything from selling cars is commission based where there's no guarantee. Uber is another one. Skip the Dishes, DoorDash, those kind of jobs where you're not guaranteed hours, you're not guaranteed income. It's just as you go about things, you get paid. Lenders can't use that. They need a guarantee of some sorts. Like you're guaranteed 40 hours a week at $25 an hour. They need to see that. Uber, Skip the Dishes, DoorDash doesn't offer that. So we can't use that unless you've been working at Uber and you've collected 2 full years of tax returns on that income alone. Okay. If you haven't worked at Uber for 2 full calendar years in income taxes, they can't use that income. All right. Even supplementary income. Like if you work a job and you do Uber on the side, they still can't use that unless they see 2 years worth of tax returns on it. That's a good question. Yeah. I'm sorry if I'm not getting your questions. Again, Ryan is usually my guy for it, so we may have to wait till the end to do what I can for these. Bankers may have rights to decrease interest rate. That's a bit tougher. I'll get to the interest rates here in a bit. Again, hopefully Ryan can get himself back on here. I'm going to see if he's sorry, hang on, we'll get to that in a bit. Yeah, I haven't heard from him. Anyways, Seasonal work also is risky. That is a good question because I just actually had somebody that was, we were looking at houses. He has a pre-approval in place, but he did fail to mention that he was seasonal. And he asked me as we were about to write an offer, knowing that he's going to be laid off in a few months, if that would affect things. And if the lenders, because they're underwritten, the underwriters are going to look into it. They're going to call your employers to make sure what you're saying is true. And he finds out that, oh, you're going to be laid off in a few months. They're going to deny that. So seasonal also isn't a very good, it's not enough to get lenders on board if it's seasonal, unless you make a very good amount on the seasonal months that you work, that you know, if you make, let's say if, you know, average people, let's say $40,000 to $50,000 a year, if you make $40,000 to $50,000 by working 6 months, that could probably be used as well, but that would be more up Ryan's alley to discuss. And then anyways, again, things like that. So anything seasonal, anything self-employment doesn't work, again, 2 full years of tax returns. But any hourly wage that at least shows how much you are making and how many hours you're guaranteed, that's what they can use, and that's what they need to see. The third and final thing to go with everything else is a big one, and it's down payment. Down payments are huge. You have to have a down payment. This is the biggest one. So about 3 or 4 ways that can help to get a down payment. Obviously, the first common one is using your own savings. The second one is using that RRSP first time homebuyers program. The third one is what we call the gift of a bank of mom and dad. So basically you can get a gift from your immediate family members. So mom and dad, grandparents, brothers, sisters, right? They can gift you a down payment. They just have to sign a letter saying it's a gift and we're not expecting it paid back and things like that, right? It's got to be a letter saying it's a gift. We can use that. What we can't use is, you know, a distant relative or an uncle or aunt or a cousin or things like that. You can't use those. It has to be immediate. Okay. And if you are going to borrow money or get somebody to gift you the money, you can use that, but that money that has to hit your account and has to sit in your account for 90 days untouched. And also, speaking of the 90-day thing, again, anybody who's new to Canada, whether you're coming from Africa or India or China or wherever, anywhere across seas that you're coming over and you're bringing your money with you into Canada, you can obviously use that for your down payment. The only restriction is it has to be brought over, put into a Canadian bank account, and that money has to sit in that account for 90 days untouched. So every time you bring more in, it resets the counter. Okay, so if you are thinking about using your money for a down payment, please bring it over as quick as possible so we start that 90-day count. Okay. And so, of course, those all 3 things have to work. It has to be a good credit, you have to have a stable income, and you have to have the correct amount of down payment to cover everything and make it work together. So again, it's underwritten, so the underwriter is going to review everything, your income, your credit, your down payment source, but it's reliable, and it tells you that maximum qualifying amount that we need to have in order to know what our shopping range is, because that is huge when it comes to buying a home. Okay. When it comes to working hours, I can't just run hours and things. I can, but it's not, it all depends on your credit, all depends on other debts and things like that. So I could give you a broad range, but it's not going to be very accurate. And that's, again, more what Ryan can talk about with you on a one-on-one thing. Car loans and other loans obviously will affect it. So if you have any loans, obviously credit cards, car loans, line of credit, all that will affect you. So the more you have of loans, the less amount they're going to approve you for, because they have to make up for you having that. Same with if you're buying a condo. Condos come with condo fees, whether it's, you know, $300, $350 a month in condo fees. If you're approved for, let's say, $300,000, we can't shop at $300,000. We would maybe be approved for like $280,000 because they have to make up for that extra condo fee payment. Okay, so there's a lot of factors that go into pre-approval, so it's hard to just, it's not a one shoe fits all kind of thing. Every person's individual. You could make the same amount of money as your neighbor and have drastically different approval amounts. Everybody's different and individual. What else do we going here? Okay, so this is a new to Canada program. Ryan is super smart with this. I let him run about it, but I really don't think he's going to be on with us. So I'm going to do my best about this. So this new to Canada program, they brought this in for anybody, obviously, who's new to Canada. If you're here, like I mentioned, between 6 months to 5 years, you can use this New to Canada program. This essentially just eliminates you because you're here, you're new, you have little to no credit history. This is made for you guys. So lenders can use bank statements, rental history, utility payments as credit support. So basically they look at how do you pay your rent on time? How do you pay your phone bills, your utility bills, and use that to build up credit. That's why it's as minimum as 6 months. So they need at least 6 months to build this credit for you. Whereas the rest of us, usually have to have about 2 years worth at least, but New to Canada, they can build it within about 6 months. So when I talked about anything from 6 months to less than a year, that is only basically affecting the people that are here from that range for 10% for a down payment. So if you're here from 6 months to a year, you have to put 10% down, which is what we can use a first-time homebuyer's incentive for. But anything past 12 months up to 5 years, it's 5% as normal. So that's the only difference in it. But again, if you've only been here for a year and a half, you still don't have a lot of credit built up, that's what this is for. Again, anybody who's on permanent residency and work visas with 183 days minimum left on it, this qualifies for you. Down payment options, like I said, as low as 5%, 10% for anybody from 6 months to 12 months. And these first-time homebuyer incentive grants, like we talked about, are available for anybody that's new to Canada. So Ryan talks a ton about it on here. Unfortunately, he's having issues and can't be on here, but I'm going to put this in here again. Anybody who's new to Canada, anybody at all, book a call with us. We'll talk more about this, but basically you are able to get pre-approved for a home in as little as 6 months of being here in Canada. We've only had it once where we got somebody in about 5 months, but they were from South Africa, and for whatever reason, their information was solid enough that we could get them in right away. But majority is 6 months is bare minimum. But even then, we've helped lots of people at that range. Okay, so it's not restricted to anybody less than a year. It's anywhere from 6 months to 5 years that anybody can use this New to Canada program if needed. Okay, so the final thing on pre-approval, because I've had this asked too. So if anybody has any issues with like credit or anything like that, you can use a co-signer. So again, an immediate family member, mom, dad, grandparents, brother, sister, whatever, they can co-sign for you to help you get that approval. As long as they can be approved for a mortgage as well, they'd have to have the same thing, steady income, good credit, and if they need to help you with a down payment or not, right? But they can do it. You can still use the first-time homebuyer incentives with the co-signer because you're still a first-time homebuyer. They're going to be committed to being your co-signer for as long as you can't be approved for a mortgage on your own. Okay. There is a risk for co-signers. Obviously, if you don't make your mortgage payments, the next person they're going to come after is your co-signer. So if you're going to get mom and dad or brother, sister, or grandparents to co-sign for you, they need to be aware that if you don't make your payments, they're going to have to do it for you. Okay. But we don't help a lot of people with co-signers. Usually we don't do that, but the odd time somebody does use it and it works out. There is a little bit of extra cost up front. It's no different than buying a house like anybody else. The only extra cost comes after the fact when you want to get them off your title, when you can be approved on your own and you just want to get rid of your family member off your title so it's yours and yours alone. And then you just have to pay the lawyer fees for that. And the last I checked, it's about $700 to $800 to do that. I mean, it's not cheapest by any means, but it gets you your own title. You can do what you want with it. You can sell it whenever you want. You don't have to worry about somebody else having their hands in the pie. Okay. So that is an option if you're thinking you may need a co-signer. Ryan and I have sat down with many buyers in his office at public places, and we've had a few people ask about that. We check into it for them. If it helps them, perfect. If not, we find out a way to help you guys after the fact. So yeah, so that's most of it for the pre-approval process. So again, keep throwing questions out as you can. I'll do my best to answer these and keep going, because I am running a little low on time here. So I'm trying not to run over here, and I'll get through what I can here. So mistake number 3 is using your bank. Disclaimer here, I am in no way bashing banks at all. I obviously have a bank I use all my stuff through. I use RBC just because there's one in Warman here and I use it, but also my dad is a general manager of a credit union back in the small town that I grew up in. He has my mortgage, he has my car payments and things like that. So it's not like I don't use banks. I use them because he's my dad, but once my dad retires, my stuff's going to Ryan. Okay, the only reason I'm not with Ryan is literally because of my own dad, right? It's family. But there's nothing wrong with using your bank. The issues that I come up with is I find I've had more deals work without using a bank than through a bank. You get a lot of headaches with them. Not saying they all are, but I've had more horror stories and good stories with them. And I'll explain. I could go on for hours on stories that have happened, but I don't have that much time right now. But I'll explain why using a mortgage broker like Ryan is so much more beneficial than using your own bank. So a mortgage broker, Ryan has access to over 30 different lenders' products. Okay, so the banks are going to be restricted to their own products. So RBC has their own line, TD, Scotiabank, whatever. They all have their own in-house product, and that's what they use. Ryan can shop all those different banks and other lenders' products to find you the best interest rate and the best program for you. Okay. He works the same hours as I do. So if it's, well, what are we at? 7:45 tonight in the middle of the night, we'll talk to you. You have a question, we're going to answer that for you, right? I wouldn't recommend calling us at 2 or 3 in the morning unless it's an absolute emergency. But if it is after supper, we're still going to answer our phones for you. People that work at the bank, I know because I grew up with my dad working at the credit union. Once 5 o'clock hits, he's home and that's it, and shut off until the next morning, right? Most banks are the same way. They usually shut down on Sundays and parts of the weekends, right? So if you need to get a hold of them, a lot of them don't work during real estate hours, which is after supper and weekends, right? So they're hard to get a hold of, especially when you need them. Ryan is going to offer you the best mortgage rate up front. So this is it. This is the best we can offer you. The bank will tend to offer their bank posted rates, which are typically a little bit higher, and you could negotiate a better rate, but not a lot of people like to negotiate. That's what I'm for. That's what Ryan's for. We're just going to give you the best rate right away. That's it. That's all. Here's the best for you. Again, as a broker and as a real estate agent, buying with us, we work for you. Okay, we don't work for anybody else. We work for you to find a property that best fits you and to make sure you get it. So we don't work for the sellers, we don't work for the banks, we work for you. So that's what we do. Your best interest is what we strive for. Whereas the bank, they still work for the bank. They still have to do what's best for their employer as well as you. So it's a bit of a gray area there, right? And again, like I said, you can call or text with any time with any questions. Banks are hard to get a hold of. I've probably had deals where I'm trying to call the bank multiple times a day and I just keep getting the answering machines over and over and over. It's a nightmare. I've also helped a buyer just now. He was going through a mortgage broker that wasn't even in this province. He was using one from Ontario just because a friend from Ontario recommended it. But because they didn't know how we do things in Saskatchewan, it was a nightmare. I can't get into details on why, but what I can tell you is that we offered on 3 different properties, had accepted offers on 3 different properties, and that lender crashed all 3 deals on us because they didn't understand the condo schedules here. They didn't understand what we were doing here. I sent them to Ryan after those 3 deals because I said, look, it looks like we're not going to get a deal done with your person in Ontario. I understand that you like them and you referred to them, but we can't buy a place with them right now. It's not working. So then we sent him to Ryan. The very first place that we offered on after getting Ryan's pre-approval, we just closed on it yesterday. So just be aware that we work for you and we know what we're doing. So that's why it's so important to use a mortgage broker over a bank. And if you have talked to your bank, that's fine. But I would recommend bringing that over and showing Ryan and saying, can you beat this or match this or do something better for us? And 9 times out of 10, he can. The odd time he maybe can't, but he'd be the first one to tell you, I can't beat that. Go with it. And that's what we're transparent. We strive for that. All right. So that's why it's so much beneficial to use a mortgage broker over a traditional bank. And also the last and final thing is on the mortgage side of things is we're here to save you money. I know you're spending a lot of money on a house, but our goal is to save your money and invest it properly. So we're here to protect you. Banks can have higher payout penalties when you break your mortgage, whether it's you want to upgrade, you want to downgrade, you want to move to a different province or different city or out of the country, and you have to break that 25-year mortgage because most of us don't live in our first house for 25 years. We want to make sure those payout penalties are slim to none. Bank penalties can be a lot higher. Ryan is going to get you little to zero payout penalties. We can't guarantee no payout penalties. We can't guarantee that, but we can at least assure you that if you do need to move, it's going to be a minimal amount. Okay. Okay, so I talked a lot about financing. I got about 10 minutes before 8. I may run about 5 minutes over, but I'm just going to go quickly through the real estate stuff now. Again, keep the questions coming. I'll do my best to answer what I can on the finance thing. If Ryan can come back here or not, I'll just double check one more time, but I really don't think he's coming back tonight, which is okay. It's unfortunate, but he's a really great guy to talk to, trust me. Again, booking link is here if you guys want to book a call with us and talk about financing, whether you want to get a hold of Ryan and see what he can do for you for pre-approval, or just see about your own situation to see if what we can do for you. 100% book that call with us, and that booking link there, we're happy to help. Okay, so on my side, really quickly before we get to the Q&A session, another mistake is buying directly from a builder. Now, I mentioned before that not a lot of first-time buyers buy a new build, which is still true, but I do want to touch a little bit on it because there are the odd people that do. Builders are a lot like banks, like I mentioned. They have their own product, they sell their own product, and that's all they want to do for you. Whereas I, as a realtor, can show you this builder, this builder, this builder, this builder, and this resale home that might be a better option too. I'm trying to find you the best home that's going to fit you, not just what's the builder is going to sell to you. Okay. You also need somebody who's going to back you up on negotiations. So a lot of times with builders, when they build the house, it's a set price. So let's just, 450,000 is the base price, no add-ons, no nothing. That's just what it's going to cost you to buy it as it is. A lot of them might not come with appliances. A lot of them might not come with, lawns and decks and finished basements and things like that. It's just bare bones. So they will not negotiate the purchase price. Because if they have a street full of builds and you offer $5,000 less and they accept it, well, everybody else is going to see they took 5,000 less. So every build is going to be essentially 5,000 less, 5,000 less, 5,000 less. So when they started at 450, at the end of the block, they might be down to 420. So it really affects their pricing by doing that. So they don't budge on that. What they can negotiate, and what I do for you as a buyer, is I negotiate those add-ons in, appliance packages, a little bit off of basement finishes, maybe air conditioners, maybe this, maybe that, maybe decks, maybe railing, whatever it is that you want to add on to it, we can negotiate that into it instead of knocking off the purchase price. Okay. So again, that's something we do for you. I can tell you which builders are good ones and bad ones, things like that, advise you properly on that. Have somebody that's going to look at the contract for you to see if there's any hidden clauses in there that may say that if the building materials rises 5% above what they were quoted at, that you guys aren't going to be the one to cover that additional cost, that the builders are still going to eat that cost. Okay. I've seen 1 or 2 contracts that state that anything over 5%, the buyer may have to cover the extra cost. And at that point, we're like, nah, that's not okay. All right. So it depends on the builder, depends on a bunch of different things, but you need somebody that's going to look out that for you and not just trust the builder. Even though I have worked with a lot of really, really good builders, you just want to make sure you cover your end. And that's my job, is to cover your purchase. Okay. I've had people ask me, does it cost anything more to go straight, or does it cost me less if I go right directly to the builder than with me? And the answer is no, because they set their purchase price knowing that realtors are going to sell their products for them. So they set the price, that's it. It's going to be the same price if you go to them or not. You just are losing somebody to negotiate those add-ons for you. Okay. So again, our job, Ryan's job, we're here to protect you and your best interest. And I want to get you the best things. I've negotiated in air conditioning before, different kind of materials in the building, right? Things that I want to put in for you, we get put in for you as much as we can, right? Or if they can't give us the whole appliance package, at least I can get you some money off the appliance package. So it's still going to be a lot cheaper than going directly to an appliance store. Okay. So that's a little bit on the new builds. There's a lot that goes into it, but again, I don't have much time. So the last little bit here, another thing that is a big mistake is skipping a home inspection. Now, this is not mandatory. So whenever you write an offer to purchase, this is usually put in as a condition, but it's up to you to do this. But I've never bought a home without a home inspection because it's honestly not a good idea, even buying a new build. Builders are human. People miss things. So we need a home inspector to make sure if they did miss it, that it gets fixed properly. All right. And it's not a dangerous mistake or anything like that. Right. Just on top of a head, I'll let you guys use a chat again. Can anybody just randomly guess, or if you know, how much a home inspection costs just for a normal detached house? Just throw out some numbers there. I want to see if you're close, and I'll answer this question too. No. If you book a call with us, if you use us to buy a house from start to finish, you do not pay us a fee at all. Okay. At the very end of the Q&A, I'll explain how we get paid to show you how transparent we are. I'll show you how you get paid, but you guys do not pay a cost for us. You can talk to me 20 times a day if you want, and I'm not going to charge you for it. Okay. So don't worry about that. You guys are already spending enough money by buying a house and down payment and things like that. We're not going to charge you for it either. Okay. All right, so I'm seeing some good numbers here. So 400, 500 to 1,000. Yeah, well, 300. So we're really close. My guy that I recommend, who is fantastic with first-time home buyers, for a detached home under 2,000 square feet, I think he's 450 plus GST or 425 plus GST. So it comes out to about $460 to do a home inspection. Now, I know you're spending a lot of money already with your down payment and stuff like that, but $460 to know every single thing about your house is one of the best investments you can do with this. It'll tell you everything. And my guy does not miss a thing. He'll tell you, he'll test every appliance in the house. He'll test the furnace, the water heater, the electrical, and he'll literally check every plug in the house with his little plug meter. It's crazy. He'll look through the walls with infrared cameras to see if the insulation is correct. There's no moisture damage, there's no mold. He'll poke his head up in the attic to make sure it's good up there and there's no leaks or mold or anything. He'll check the roof, make sure the shingles are good. He'll check the basement, make sure there's no water damage anywhere. Like it's crazy, this stuff, and he'll find a lot. So that's something I don't want to scare you guys about. Getting a home inspection is a great thing. I've done it with every house I bought. They are going to find something. Every single house, whether it's a new build or not, they will find things. What we look for is the major things, right? We want to make sure it's not detrimental to you moving in, whether it's electrical that are issues. Make sure your big ticket items, so roof, water heater, furnace, air conditioner, HVAC system is functioning properly and there's no issues. Okay. Yeah, about 460 some, 466 and change for a detached house. Townhouses can be cheaper because it's less to do. Apartment condos are about $300 to do. So it gets cheaper, but a standalone detached house is about 475, 460, roughly in that range. So the thing about this is it's a condition built into the offer. You have to be satisfied with the home inspection in order to purchase the house. If it's really, really bad, like there's mold damage, there's cracks in the foundations we couldn't see, there's major structural issues that we couldn't see, you can walk away and say, we're not buying this place, we're going to go find something else, and that's okay. Little things like, oh, that plug-in over there and by our kitchen doesn't work anymore. Well, it's a $5 fix and I can do that for you. I wouldn't recommend walking from that, but it's up to you. But things that we normally do, let's say the furnace wasn't functioning properly, which just happened to me, especially in this cold snap. We either get the sellers to fix it before you take possession and show proof that it's fixed and a professional fixed it, or we get them to knock off some money off the purchase price to save you money so you can take care of it. Or sometimes we've had it where sellers can simply say, go kick rocks, we're not fixing nothing for you, take it or leave it, and then it's up to you whether you want to walk away or not. But most people, when they sell their house, they want to sell it and they'll do what they can for you. So example of that furnace is we got in there and it was set to 20 degrees, but it was minus 30 and the house was at 8 degrees. It was freezing cold in there. Not enough for the lines to freeze yet, but close. And I texted them right away, said, look, we're looking at this house. We want to put an offer on it, but we need to make sure that furnace is functioning before we go through with it. The next day they had that night they had a plumber out there fixing it because it was minus 30. It wouldn't have lasted. The next day they sent me the receipt from the plumber and the proof that it's fixed and it's all good. So those are the things that we look for. Electrical, make sure the electrical panel is good and there's no crazy breakers that aren't doing their right things, like putting a dryer on the wrong breaker because it's a lot of heat and we don't want your house burning down, right? Those kind of things is what we're really looking for. The other things are all minor maintenance things like you find on a car, right? You take it out, do an oil change, right? Inspect your furnace once a year just to make sure it's functioning. Inspect your hot water heater while he's inspecting the furnace. Those are little things that you do as a homeowner, but the things that aren't functioning properly, we want fixed before you move in. All right. So I negotiate that for you. I say, we need you to fix this or give us some money off the purchase price and go from there. My own house, for example, just so you know, I'm not just other people's house, I've done it for myself too. I have an ensuite bathroom in a 2-story house. Our bedroom's upstairs with the ensuite bathroom. My inspector noticed on the main floor bathroom that there was water slightly leaking into it from the upstairs shower. We found out they missed a bead of caulking by the shower, and that's where the water was getting into. So I basically went to Home Depot for $5, bought this bead of caulking, did it myself, sealed it all up. He came back, checked it, said, nope, there's no more leaks, you're good. If I didn't see that or catch it or fix it or know about it, that would have cost me so much money in water damage that I would either have put an insurance claim in, which would have boosted my insurance premiums, or out of my own pocket, which would have been thousands of dollars of damage. So $460 some is nothing compared to what could happen if you don't see it. And there's a lot of things we don't see. That's what the inspectors are looking for. Okay. So just be aware, you can save a ton of money by spending this $400. And my guys are good. They'll find things, they don't miss things, and you get a full report by the end of it, so you can always look back on it. Okay, so again, I apologize, guys. I'm at 8 o'clock. I got one more quick thing to go through, then I'll get to the Q&A for everybody. But again, if you guys want to book and talk with us, book a call. We'll talk with you here. So the last little thing is condos. If you are buying a condo, so that's apartment condos, that's townhouses, anything that has a condo corporation attached to it, okay? This is called an estoppel package, so it's mandatory that it comes from the sellers. It's in the offer, or it's in a contract that you have to receive this. What's not mandatory is you getting a lawyer to review it. However, you have to pay for a lawyer to transfer all the stuff at the end. So you might as well get them to look at this for you anyways, and most of them don't charge you extra to look at it if you're going through the whole process with them. I can tell you what's in here. I know what's in here. I've seen 100 of these things. I just am not qualified to explain the bigger stuff to you in it. The main thing to look for is the reserve fund. That's how much money the condo corporation has set aside for any repairs on the condo, right? We typically see things over the $100,000 mark. So 130, 150, $200,000 is a good, healthy one. But we need to know what's going to be fixed, what has been fixed. Is there going to be an increase in condo fees? Are they putting the right amount of condo fees aside for the reserve fund and the maintenance fund and things like that? So the lawyers can see that, and they'll look through it, and they'll look through the whole reserve fund study and see, are you putting the right amount of money where it's supposed to be? Do you have enough money to pay for anything that needs to be repaired in the future, right? It has all that for you, because if they don't have enough in that reserve fund to fix anything, they're coming to the unit owners and asking them for what's called a cash call, which essentially is them asking you for money to cover the cost of it, which is crazy. But it's happens a lot. But we make sure that the lawyers review this so that doesn't happen to you, or you are at least aware of it happening, and you can decide if you want to proceed with it or not. Okay, so that's a huge thing to look for. Again, we're here to save you money, not cost you money. It also tells you what the bylaws are, so what you can and can't do within your unit and just outside your unit. It'll tell you what the, it tells you what parking stalls are yours. If you have a garage, it tells you every little thing about the condo. It's crazy how thick this is. And that's why it's good for a lawyer to read it, because they know all about it. But that's the biggest thing, is knowing how much is in that reserve fund. Make sure you know what your condo fees are. Make sure that they have been audited correctly. And so that you're not going to get a giant increase in condo fees. And I've seen it once. One of the downtown condos, it was at $600 a month, and they shot the condo fees up in 1 month to $720. $120 a month is an insane amount. And so they seen that, and they walked away instantly, which can't blame them for that, right? So we want to make sure we see that kind of stuff. So that's why it's huge to not get, it's huge if you don't get a lawyer to look at it. It could cost you a lot of money. Again, it could be a ranges of a few $100s to a couple $1,000s to tens of thousands of dollars, depending on how bad the condo corporation has been run. But most of the condos here in Saskatoon have been run very well. And a lot of them have healthy condo fees, but we just want to double confirm that. Okay. Again, to reiterate for the whole thing, our jobs are to save you money and not cost you a lot of money. We want you to invest properly. That's the whole point of this sort of thing. So, okay, so I've been about 4 minutes over, not bad, especially because Ryan wasn't with us today, which is unfortunate, because I know you guys will really like Ryan. He's super knowledgeable about everything, especially when it comes to financing. So, but anyways, that's a lot of it for now. I'm sorry if I ran on faster than I was supposed to. If you guys missed anything, let me know. But now hopefully I at least helped you guys understand a little bit of what goes into buying a first home, what you need, what to watch out for. I know this is a lot and it is a big step, and that's what we're here for. We're here to walk you through the entire step from literally now and even after you take possession. I still have past buyers that have never bought a home before reach out to me and say, hey, my house is doing this. Is this normal? Because they've never been through a winter like Saskatchewan is in their first house. And I say, yep, all you got to do is this or that, or they don't know how to fix something simple. And instead of them calling, an electrician to come out charging them $100 if they got to change a plug or something, they don't know how to do it. Either say YouTube it, or I can simply do it for you because I've owned homes for years. And not saying I'm a I'm a contractor by any means, but it's not hard to do simple things in a house once you learn it. So, and even if we can't do it, then I give you numbers to plumbers I work with, electricians I work with, construction people I work with. If you need anything in your house, I have a person for that. So you don't have to find out somebody that you don't know. I know these people. I've worked with them. I know their work. I trust them, and I have full faith in giving them to you, especially with insurance brokers for your house insurance. I work with the owner of an insurance company. So he deals directly with anybody that I send him because we work together. He's the owner. He doesn't just pass you off. So lots of things like that. So again, thanks guys for this whole thing. Thank you for everybody that's still sticking around. I really hope that you learned a little bit of something from this. We are now into, again, the Q&A session. This is what it's going to look like when you book a call. It'll bring up a days and times. That way it'll put it right into my calendar. So I know exactly that at 1 o'clock, I got to call Mr. John and it's booked in there and we're good. So this is what it looks like. So go ahead. Booking link is here again. I am going to put, let's see if I have it here. Yeah, here it is. So I'm going to put all my contact info in here too. So that's my email, my direct phone number, and my link tree again in the booking call. So I'll try to get to these questions here. I'll do my best to answer them, especially when they come down to financing. Usually Ryan is here to take care of all of this, but he's not. So I'll do my best. If not, I'll just say, let's get a hold of Ryan and we'll find this out. So the validity of the pre-approval is once Ryan says you are pre-approved, it's valid for until, usually they don't lock in interest rates like they used to. It can be for 90 days roughly, but usually it's like a floating one. So what happens is they approve you for a little bit higher than what the actual interest rate is. So let's say if it's at 5.2%, they might approve you for, I could be a little wrong on this, but just for example, don't quote me on this. They could approve you for, let's say, closer to, 5.6 or something like that. Because they're going to leave room for, fluctuations of interest rates, right? So then once we offer on a place and get that offer accepted and I send it to Ryan locks it in at the current rate. So if we get it at 5.2 and he locks it in, then you're good until you take possession of the home. All right. But as we're looking for places, as long as you don't change anything, as in your down payment amount, a job change or anything like that, it'll still be valid until there's any drastic interest rate changes, and then go from there. See what else I want to see. I'm just going to scroll back a little bit to see if I missed anything. I don't think I did. I mean, keep throwing questions out if you want. I think I kind of grab what I can. Let's see. Okay, so I know I touched a little earlier. I was saying I was going to tell you guys how we get paid and things like that. Oh yeah, 90 days is lots of time. Like if you were, it doesn't really, honestly, it doesn't really matter either. It's all preference of you as a person, right? I found people a home within the first few days of being pre-approved, and I've also found people homes, a year or two later, right? I'm still working with some buyers I met at one of these webinars 2 years ago, and they still haven't found a place just because they take their time and maybe look at one place every few months until they find the right place. But it's all up to you, right? If in 90 days, if you start actively shopping from now until 90 days, I guarantee you we're going to find a home within 90 days, right? It just depends on what you're looking for. If we got to change what you're looking for, things like that. So yeah, easy. 90 days, super easy, especially now because we're starting to, it's winter. It's super cold right now. We're still in kind of a slower season. But it's gonna start picking up as the weather gets nicer, people start getting out more, and then once that spring market hits, boom, it's gonna go crazy. Tons of homes on the market, but also tons of buyers. So it's things like that we navigate every single year. But again, I wanted to touch on how we get paid and just so what you guys know about the whole situation. So if you go in to get a pre-approval, you aren't paying Ryan a service fee at all. You don't have to be like, okay, well, now that I give you pre-approval, you owe me $200 for my service. No, you don't. Ryan gets paid after the mortgage gets funded. So he gets paid on the back end by the lenders and the financing and things like that. So you don't pay him anything. For me, same idea. When you go to sell your house, we charge you a commission to sell your house. That's where you see it. But how it happens is, let's say it's 3% of the purchase price or 6% of the purchase price is what we're going to charge you in commissions. So what the sellers do is they take that commission, we split it down the middle, and when we buy the home, that split commission, half of it gets given to the seller's agent, and the other half pays me, the buyer's agent, right? So you aren't directly paying me a fee to do anything. In a roundabout way, you and the seller are both paying us because the seller has to pay out the commissions based on his the proceeds of the sale of their home. But without you buying a home, they don't have those funds, right? So in a sense, you're paying it and the sellers are paying it, but directly, no. The only time I've ever charged anybody for a commission for buying a home is if we buy a home that's off market and the seller absolutely refuses to pay any sort of commission, and you don't want to do it on your own. You're like, Andy, I can't do this on my own. I have no idea what I'm doing. I would say, okay, good chance is you're going to have to pay me the commission in because I have to cover my end in case of something, right? It covers my end, covers my insurance and things like that. But what I can do is put that onto the mortgage if we can. But I've never had to actually go through with charging somebody commission. I've ended up negotiating it with my negotiation skills. That's the point of it. So you don't have to pay it. Okay. But that's the only time a buyer may have to pay for a commission is if it's an off market property and the seller of it is just completely difficult, but it's very, very rare. Okay. So just that's how it works. Let's see. If the first pre-approval has lapsed, are we subject to another? Yes, you are. If the first, so for whatever reason, if your pre-approval lapses and you have to get another one, you will have to get it again. But with Ryan, the way Ryan works is he is always in constant contact with you. So if it's a few months before we get it, he just makes sure to review it with you every month or so to make sure nothing's changed, things are good, and we keep that same amount. So if you're approved for 300,000, he's going to make sure that your down payment is still okay. Your income is still there. If you got a raise, that can help. Things like that. If anybody has child tax benefits, we can use that as income as well. Okay, so only if Ryan has locked you in for like 120-day approval. If it lapses, you have to get another one, yes, but most of the approvals now are those free floating ones that just fluctuate with the interest rates. Let's see what else. There's a question here from Sunny. That's kind of more for Ryan though. Yeah, again, I really wish Ryan was on here to answer them. We would see if he's able to, but I don't think he can even get on here. So I would really like to answer that for you. I'm honestly gonna have to run that by Ryan just to get his for sure answer on that one. So again, sorry, Sonny, for that. I really should get to answer that one. It's kind of up Ryan's alley, unfortunately. Yes, child care benefits. So if you're getting child care tax benefits from the government, you can add that to it. We've actually had it before where somebody got pre-approved and they're like, oh, well, I was really hoping I could get a little bit more. And we're like, well, do you have kids? Do you have child taxes? Like, well, yeah. Well, how much is that? X amount of dollars. Well, add that to it and it boosts up the pre-approval amount. That is considered income. Yeah, same thing. Once you get pre-approved, it's valid until we buy a home. They don't really lock you in anymore. It's free floating. So as long as nothing changes, it's still going to be valid, right? So if it goes months at a time, we're going to reevaluate it every month or two just to make sure everything's still good on your end. But it's still a pre-approval in place as long as nothing's changed. As long as your down payment's good, your income is still the same, you're still working at the same job, nothing's changed. it's still good. It's still okay. So yeah, like I said, I've been working with some buyers for over 2 years and they still haven't found a place, but they're still pre-approved. I can go look at a home with them tomorrow and we can still buy one. Their max approval amount might have obviously changed in those 2 years, but they're still able to get, they're still pre-approved for whatever range they're in. Yearly income to be approved. Again, that's a very hard question just because it depends on everything. Depends on down payment, things like that. But because Ryan has given me the green light for this, because I'm not the finance guy, so I am limited what I'm allowed to give advice for. What I can say with this, he says, just to make it easy for everybody, take away any debts you have. So just let's just say you came here fresh, no debts, no nothing, solid credit score, and down payment isn't a factor. You take your salary, your annual salary, you multiply that by 4, and that's what you could be approved for. Okay, so if you make 50,000 a year and that's it, and that's just your $50,000 a year, you could be approved for $200,000. But that's if your credit is good, your down payment's there for it, and your income supports it, and you don't have any debts of any sorts on top of that. Anything that can affect that full amount, it'll drop it a little bit more. Okay, so everybody is different, but a close, rough estimate would be about 4 times your annual income. Can you get a pre-approval without hitting the credit score? Yes and no. You can't get a full pre-approval without hitting a credit check. They're gonna have to check your credit to get a pre-approval, right? What Ryan can do though is you can have a conversation with Ryan and tell him everything. Say, this is what I make, this is what my income is, I don't have any debts or anything like that. I believe my credit score is this. You can check it on any of these soft check sites. I have a couple that if you reach out, I can get you those links to them. It checks your credit for you, and you could use that with him and say, this is my credit score, I have this for a credit card. Give him all your information that you would if you're getting a full pre-approval, and Ryan could roughly get you a rough number. But if you want to know absolutely for sure, it will have to hit your credit score. Yes. It's not a huge hit, it's only a couple points, he says. And he's talked to the I believe the president or the owner of Equifax, or a high-end ranking person at Equifax, and they said, yeah, it's a small hit. So I wouldn't be too concerned about that. Yeah, so so with this credit score, when did you get pre-approved then? When was that? Because there is, I know I talked to Ryan about this before. So if you get a pre-approval and then like, a few weeks to a month or so, you get it again, I don't believe you get hit again because they're showing, yeah, so a couple weeks ago, if you get it checked again with Ryan, it won't hit your credit score because they already seen that you got it, and they know that you're shopping for the, the best rate, and make sure, so they see that you're shopping for it. It's not going to hit you again. Okay, you've already got it done. If you waited like a few months to get it done again, it may hit you again. But if it's only been a couple weeks, it's not going to hit you again to get Ryan to check it as well. If you do down payment of 60,000 plus and earn an income of 55. Oh yeah, so that's a really good question. Again, so for anybody who gets a pre-approval, this happens a lot. Honestly, it does. Sometimes based on your income and things like that. Maybe you're approved for, let's say, again, a number of $300,000. That's based on your income, your credit, and a minimum down payment of 5%. Let's say you're like, well, 300, I kind of want to get over that. You can, and the only way you can boost your pre-approval amount is, unfortunately, putting more cash down. Okay, so let's say you're pre-approved for $300,000 with a 5% down payment. Anything you want to go above 300,000, you have to put more down. So if you want to go to 320 or 330 or 340, you have to put that much money down. So you put $40,000 down, you're going to go up to that 340 mark. Okay, but it has to just be more cash. You can't actually boost your pre-approval amount unless your income supports it, right? Again, it's a little bit finicky that way, but yeah, if you put more cash down, it can boost you up. If your income supports you for, let's say, $600,000, but your down payment can only support you for so much. Yeah, obviously the more down payment you get, the more you can get up there. But if you're capped at 300,000 because of your income, the only way to get above it is more cash, unfortunately. How do you know your monthly up and the amount that once we have to be paying on a monthly basis? So that's a really good question. Did I put it up here? I didn't. No. So if you go, I have a really cool, I'm gonna put it in here. If you go to my website and you got a realty.ca, scroll down a little bit. I have a mortgage calculator on there. So you can play with it. You can put any purchase amount on there, any purchase price of the home, any interest rate, any amount of down payment down that you want, and it'll calculate what your monthly payments are. You can even put in how much your property taxes are for the year, and it will calculate what your monthly payments are. So if you put $350,000 for a house, I'm going to put 5% minimum down payment over 25 years at a 5.2% interest rate. It'll tell you exactly what your monthly payment is going to be on that. So again, because you can put so much in there, different purchase price, different interest rate, different down payment, it'll calculate that all out for you. So if you go to that site, it's just down there a little bit. Interesting. Okay. Okay, I've never had that before. So then I'll go the other route then. Let's see. Hang on here. See if I can find it here. I can't remember the exact. I'll have to find that for you guys and I'll send it out too. But there's another website I have too. It's a different link, but it's on there as well. If you go, I'll have to find it for you guys. Sorry, I'll find that for you guys at the very end of this webinar. When I stop sharing my screen, I'll find it for you guys and put it in the chat here. But yeah, but you can play with that mortgage calculator. It's a really good tool to use. I use it for lots of people when I have one-on-one calls. They're like, well, if I buy a house at this price, how much is my payments going to be? And I just plug it in there and it gives them a pretty close range. Will it matter if you're employed for 6 months only for same company, but under permanent position full-time? Very good question on that. So again, something I didn't touch in the main stuff because I didn't want to run out of time. Usually when it comes to getting mortgage approval, you have to be at a job for a minimum of 3 months, just basically to pass probation period. Anything after 3 months, then you're good. So if you started a job, you said, Andy, I just started a new job today. When can I get approved? You can't be approved until you hit that 90-day mark with that company, but that doesn't mean we can't start the approval process, get you pre-approved, but once that 90-day hits, it's in full effect. Okay, so if you've only been working for an employer for 6 months, as long as we get that that income guarantee from them, so you are going to make 40 hours a week at $20 an hour, at least as long as we can see that from your employer, that's what Ryan needs to see and the lenders need to see is that, right? As long as you're permanent full-time, I know you can use believe you can use some part-time as long as you're still guaranteed the hours, but obviously if you're working 32 hours at $20 an hour, you're not going to get as much of a high approval than working 40 hours, right? So that is another option too. So yeah, it's a good question. As long as you've been working in a place for a minimum of 3 months, we can use that. For first-time home buyer incentive, is it 5% from the government? If I put 10, will it be 10? So no. So for the first-time home buyer incentive, your minimum, doesn't matter what you put down. You can put down any amount that you want for any resale home. The government is only going to give you 5% as well, except that they will not help you get to 20%. So like I said, if you put 15% down, they're not going to give you 5%. They're going to give you 4.9%. But if you put 5%, 6%, 7%, 8%, whatever, they're still only going to give you 5%, right? If you buy a new build, they can give you up to 10% as well, but that's only on a new build. Resale homes, just 5%, no matter what you're putting down, up to 20%. Yeah, so I'll get the recording to your emails. Like I said, by the time I wrap this up tonight, I got a pretty solid day tomorrow, but I'll try my best to get it out to you guys tomorrow. If not, it'll be Friday. If you guys don't see the recording link by Friday, please reach out to me again. It might be in your spam folders, it might be in your junk folders. If it's not in there either, reach out to me and I'll get you the link directly for whatever reason it gets sent to you. So I did get a direct message. Sorry, I'm gonna say this out for you, Mel, but everybody needs to know this too. Is it advisable to buy a 1-bedroom, 1-bath condo? Is it difficult to sell? And that is another super good question, because I dealt with one of those last year. It all comes down to what you want to do with it and personal preference. However, it is also my job to advise you in the proper real estate investing as well. So if you're going to buy, if you want to buy a 1-bedroom, 1-bathroom condo, go ahead. Absolutely. If it works for you, 100%. It's cheaper. However, selling a 1-bedroom and 1-bathroom condo is a lot harder than selling a 2-bedroom condo, because majority of people and investors are buying 2 bedrooms because they can rent it out and you can have more people living there, more family, more renters, right? 1-bedrooms, 1-bathrooms are very hard to sell. I had it listed in, when did I list that one? I listed it in February. Had a couple of showings here and there, but it took honestly till September to sell it, just because majority of the feedback was it was only a 1-bedroom. And also the other factor was my seller didn't want to go down too low in price, because I knew we could have sold it at a certain price, but she didn't want to. She was willing to let it sit for a while, which I sometimes don't advise. But again, it's you hire me, you tell me what you want me to do. You are my boss. Okay, but anyways, so would I advise you to buy one? I'd say if it fits you and what you want, go for it. But if you're worried about resale, I'd be like, well, resale is going to be bad. I would recommend buying a 2-bedroom. Okay, but those are the things that I'll advise you on each property we look at. Same employer for a year, but there is pay increase. Do we need to wait for 3 months? No. The minute you get a pay increase, that goes into effect right away. Happens all the time. It actually saved a deal on me in, we took possession. Let's see on my board here. Took possession and I erased it. Would have been on last Friday. I took possession of a house. We got approved, everything like that, bought it. We were very close to not getting the full approval because there was a hiccup in there. I think income, there was a bit of a hiccup on what he said he made and what he actually got, but he ended up getting a raise at that same time, and it got him back to where we need to be, and it worked out perfect. So you don't have to wait 3 months if you get a raise, it in effect right away. So first shopping at a house at $320,000 and you get a raise and it boosts you up to 330, 340, perfect. That just helps even more. Pre-approval on a couple were one full-time, the other seasonal, healthy household income jointly, but with a pre-approval only. Nope. So when you get a pre-approval, if you're going in with a spouse or family member or whatever it is that you're doing with somebody else, they're going to look at the primary breadwinner, or actually the primary job holder. So they're going to look at the full-time position. That one's what makes the most and has the most hours and the most stable. And they'll use that one to make the approval on. But anything part-time afterwards will just be supplemental income, as long as you can show how much you make on it. So if they're working seasonal and they make $20,000 a year seasonal, they can still use that as long as they know that the main income is the full-time 40-hour a week, blah, 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 right? So yeah, you can use supplemental income after the fact. But again, disclaimer on that, like I mentioned earlier, if it's Uber or anything like that where there's no guaranteed income, then we can't use that until you have the tax records. But if you work a seasonal job that pays you 40 hours a week for 6 months out of the year, as long as we see that in a letter somewhere, you can use that for sure. We're eligible now as we still have a car mortgage. So I was thinking we need to wait for the pay increase to get a higher expected value of the house. I understand that, yeah, and it all depends. It honestly, I've had people, so many different options, right? Some of them will go and say, you know, they get the pre-approval thinking they can't, and Ryan pulls out some magic and gets it done. Or there's some people that go in there, they don't get what they quite want, and then we have to work out what can we do to get it higher? What can we do to make this work? And if we can make it work, perfect. If we can't, then it's a simple waiting process. So feel free to reach out. If you don't think you can, there might be a way we can make it work. We've done it lots where we found a way to make it work, or maybe there's something that Ryan could figure out to work with you, right? It doesn't hurt to at least have the conversation with him. If he knows that he could maybe make this work, then he would probably get you to fill out the application to try, or he would tell you flat out, we probably can't make it work right now. But the beautiful thing and why I work with Ryan is we never tell you no, and that's it. If we say it's usually just not yet. So what Ryan will do is if he can't get you approved right now based on whatever, he'll at least give you a roadmap on what to do to get you there the fastest and the smartest way possible. So that even if it is 6 months to a year from now, you'll be ready and we're ready to rock. And we have no issue waiting that long. I've like I said, 2 years I've been waiting for people, and I talk to them all the time. It's just how it happens. So it wouldn't hurt to have that phone call. Again, I'm going to put this in here again because we're getting. Yeah, here's the. Oh, sorry, that's not the right one. Hang on. Let's find this again. I see people have been booking already, so thank you guys for that. I look forward to talking to everybody here that has booked, and I'm going to put this link in again because we're kind of losing it a bit here, but I'll go back now. Where was I here? So if one pays a down payment of 20% and the mortgage insurance premium becomes zero, what implications does it have on the property in terms of insurance? Good question. So when I say mortgage insurance, it's not insurance on the house. It's insurance for the lenders that you do not default on your mortgage and not pay your mortgage and get foreclosed on. So anything under 20% of a down payment, they have to insure it because you're not putting a lot down. They need insurance on their end that you are able to still make the payments. And it's fine. Majority of people have insured mortgages. Every mortgage I have is an insured mortgage. If you go 20% and over, it's not really like they're insured. It's just there still is some on there, but you are paying a higher interest rate because it's more of a risk on their end. All right. So they're still going to be making some money off you, whether it's through insurance premiums or higher interest rates. So just because you're not paying the mortgage insurance premiums doesn't mean you're not somewhat paying for insurance in a sense in a roundabout way. So the real benefit to 20% and over is mostly for people that have bad credit. So if you have bad credit and you can't get approved for an insured mortgage, then you can go for an uninsured mortgage and go that way. And lenders will typically do it that way. So if you have like, I don't even know what credit score is the limit, but let's say you had a 500 credit score, you could do an uninsured mortgage and they still push you through, right? You still have to put a lot more more money down, but you could still get approval for a mortgage. The other way you need an uninsured mortgage is if you're buying it as strictly as an income revenue property. So you're buying it to rent out. If you're buying a rental property, it has to be 20% or over. You can't get an insured mortgage on a rental property. But if you're buying it for personal residence, then anything between 5 and 20%, right? So yeah, in terms of insurance, it's not for you, it's for the lenders to make sure that you aren't going to default on your mortgage. I want to mortgage a house and a car as well. What should I go for first, or can I do both? Again, good question. Do not do both. Please don't do both. Figure out what you need first, and we can work with that. If you would rather buy a home first at a higher value, do the house first, buy the car after. Because once you have the pre-approval, so let's say $350,000 your pre-approval, buy the house. The minute you get keys and possession of the house, and you get the funds into your account, then you can do whatever you want. Quit your job, buy a whole bunch of furniture for it, buy a new car. It doesn't matter because you've already got the funds for it. It's just now up to you to make sure you can make the payments, okay? Do not do both at the same time. It'll be a nightmare for your credit, and it can really affect everything when you do it. They can see that you're getting a mortgage, they can see they're getting a car financing. So just do one or the other, but I would recommend if you want to buy a home, do the home first, get the car after, right? It's way easier that way. Do you work with any Métis first-time home buyers? Good question. I did touch base on that earlier, but yes, I do. I've never so far have yet to use it, but it is there. Yeah, I have lots of information on the Métis first-time home buyers incentive. So if you want, shoot me a text. My number is right here. That's 639-525. Shoot me a text. I will email you over the info I have and the contact of the person at the Métis Society that deals with it. Basically, the most I know about it is they're giving up to that $15,000 for a down payment plus closing costs, which is fantastic. All you have to do is still be able to be pre-approved for a mortgage. And so if you talk to Ryan, say, I want to get a pre-approval, we're going to use the Métis first-time home buyers grants. He can work with it the both ways. All right. So that is a great question. I've never had to use it yet. I am looking forward to the day I finally get to use it because I talk about it lots. But yeah, so definitely shoot me a text if you can. Send me your email, and I'll get you that info and contact info too if you are thinking of going that route. But yeah, good question. What else? Can we get a zero mortgage and still not increase the higher interest rate through negotiation? No, unfortunately, no. Or interest rates are not like home prices, right? I can negotiate my tail off for you to get you a good price on a home. Interest rates are typically still set. It's still regulated, it's still set by the banks and stuff like that. So we can't really, what Ryan can mostly do for you is if you want to put in and not pay for, like you want to have I guess I want to make sure I'm reading this right though. Can we get zero mortgage and still not increase the higher interest rate through negotiating good credit score? Are you talking like the uninsured mortgage, right? The zero mortgage, are you saying an uninsured mortgage over 20%? Just to make sure. Okay, so yeah, you can't really negotiate that interest rate, but what Ryan can do is again shop around to all the different lenders and programs to find you the best rate out of that option. All right. And then what he can do is he can show you what your monthly payments are going to be based on that interest rate. And then he can show you what your payments would be, let's say at a insured mortgage with less down payment to see where you would be saving the most money. Right. I mean, obviously, if you're going to put like 30 to 40% down, then yeah, 100% do that because your payments are going to be way less than if you put 19% down in insured mortgage. But if you're riding that fine line of I can put 20% down or 21% down or 25% down, is it better to go 25% with uninsured mortgage or 19% with insured mortgage? Then we can run those numbers. But if you're putting a ton down, then it doesn't make a difference. It's best to go an uninsured mortgage. But you can still shop around for the best rates, the best programs. And when I say programs, I mean things like so if you're planning on paying a lot of your mortgage down year over year and putting more than what you're supposed to pay on it, he can find you programs that you can put $15,000 to $20,000 down per year and not get penalized for it. So those are the things that he looks for to help you out, right? And whatever's going to fit you guys, he'll shop around that rates for you in programs. Do money lenders provide yearly and monthly prepayment options like bank? I don't know, Sonny. I believe, is that what I was talking about there, Sonny? With if you want to pay off a chunk of it at a time for a year, if that's what you're asking, then yes, he does shop around for those kind of things for you too. I believe if he uses like First National or Equitable, I think, but I know First National is a really good one that Ryan likes to use. They usually have the best interest rates and good programs, and where it's up to like $10,000 to $20,000 a year on that you don't get penalized for. I haven't heard yet. He may have one. He hasn't told me yet. If there's one that you can put as much as you want down and no penalty, that'd be something that you could talk with him about. But I do know he shops for programs that you can prepay as much as you want or a certain amount per year. So yes, definitely does that for you too. So lowest credit score you're able to have your client approved for a home and for how much? I was just imagining. Honestly, I don't know because I don't deal with that side of things. The only thing I do know is that 620 to 650 is roughly the low, like the starting point for an A mortgage. There's A mortgages and B mortgages. A mortgages are like your insured mortgages, really strong mortgages from CMHC, good strong lenders, really, really good programs. But you have to have a credit score of 620 to 650 at minimum to get there. Anything lower than that, you're looking at more B mortgages, which is a different line of lenders, higher interest rates, higher down payments because you're more of a risk. What that is, I honestly don't know. That's more for Ryan to tell you. I don't know. Yeah, thank you. I appreciate you guys coming out for this. If you guys have to take off, go ahead, take off. I will stick around here as long as you guys want me to. It's fine for me, but keep the questions coming so you have them. I hope to help, but anybody who's still sticking around here, again, I'll put it in here. Again, that's not it again. I gotta redo this again. Thank you for everybody who stuck around. Thank you for the questions. Thank you for who's booked a call and reached out to me. I look forward to talking to each and every one of you. One thing I want to mention too, before you guys jump off too, if you guys need to reach out to me, that number that was messaging you about the updates, if you guys couldn't tell, it is an automated messaging system. I can message you back on there. If I have messaged you personally back on there, I can, but I don't see the messages coming unless I'm logged into my computer and looking at the program. If I don't see it, it's not because I'm ignoring you, it's because it's an automated number. If you want to get me directly and have questions, book a call with me, or as always, this is my direct cell number. As a realtor, I'm always out of the house. I'm always doing showings, appointments, things like that. So if you need to get a hold of me, call me, text me on that one. I have no issue talking to you guys on that. I guess I sent that to Mel here. I'm going to give you guys 230. I'll give you guys that number. That's my direct number. So again, like I said, you can message the other number. Maybe I'll see it, but if it's urgent or you really want to talk to me, that number is the one. So again, Ryan, apologize profusely not being here. I know you guys would have loved Ryan. He's my main guy. The guy works magic when it comes to financing. Definitely reach out to him. Let him, reach out to me. I can get you in touch with him. He's so good. So yeah, if anybody doesn't have any more questions, I appreciate you guys all. Yeah, I can give you guys Ryan's number too. Just when you talk to Ryan, just let him know that it was from the webinar. Ryan's number, if I get this right, 20, hang on, I want to make sure it's right before I send you guys that. Oh, there's Ryan right there. Yeah, he wasn't able to get back on, but his number here is, when I send you the email too, our contact info direct one is going to be in there as well, but I'll give you Ryan's 2207. Oops. That's Ryan's direct number. So if you do reach out to him, let him know that you listen to Andy ramble on for an hour and a half on the first time homebuyers webinar, and he's happy to help you out too. Maybe he's, I don't know, he said he was back online, so he might be in. But anyways, yeah. Thank you guys again. I appreciate. I hope you guys have a great night. Stay warm. It still sucks out there. I'm sorry. It is Saskatchewan. This is our winters. Good way to find a furnace is working in these houses. But anyways, oh, sorry. Yes, if you guys are waiting for me here, I'm going to stop this right now. I'm going to, 1 second really quick, is I'm going to get you my actual website. I don't know why the other one wasn't working. That way you guys can play with the mortgage calculator. And back to you guys. Here is the website. I'll give you guys a minute or two to click on that. That's where you can access it to do the mortgage calculator. All right. So again, I appreciate everything. I'll give you guys a few minutes, but I will be signing off here right away. Ryan says, sorry, he couldn't see you guys. And he's looking forward to talking to each and every one of you that he can when it comes that time. So you guys have a fantastic night. Take care, and talk to you guys soon. Thanks.